Recommendations to improve air safety. Americans are feeling slightly more optimistic about the U.S. economy this month, though there are still concerns about the potential impact of President Trump's tariffs. New data shows that the Consumer Confidence Index has risen by 2 points since June, just as the Federal Reserve prepares to make a decision today on whether to cut interest rates. Joining us now to provide more context is Javier David, business editor for the Dallas Morning News and a CBS News contributor. Javier, good morning. What can we take away from this slight uptick in consumer confidence? I understand that, despite the headline increase, the details reveal a more complicated picture. Javier, yes, it's definitely a mixed picture. The IMF just released a report suggesting the global economy is holding up relatively well despite the uncertainty surrounding tariffs. That resilience is partially reflected in the consumer confidence numbers. While the overall index and future expectations both rose, the present situation index actually dropped to a 3-month low. So while markets and consumers are adapting to these historically high tariffs, the highest we've seen in about a century, they're still uncertain. The economy hasn't crashed, and in some ways it's still delivering unexpected strength. But at the same time, people are still struggling with rising prices. That's why confidence remains below pre-pandemic levels. In short, consumers aren't doing terribly, but they're far from feeling great. They're still feeling the pinch from inflation and tough labor market conditions. Yesterday's JOLTS report, Job Openings and Labor Turnover Survey, showed how difficult it is for people to find new jobs right now. Interviewer. So that gives us some insight into how people are feeling. But when it comes to the Fed's decision today on interest rates, they're looking at more than consumer sentiment. What other data are they considering? Javier, right? There's increasing pressure on the Fed, but they're expected to hold rates steady for now. There's very little chance of a rate cut today, though we might see something unusual: 2 dissenting votes on the FOMC, Federal Open Market Committee. These 2 members have been openly in favor of rate cuts recently, and it's worth noting that both are seen as potential successors to Chairman Jerome Powell. As you know, President Trump has made it clear he wants to move on from Powell. Still, today's meeting is setting the stage for a possible rate cut in the fall. The Fed is trying to balance its mandate, maintaining price stability while keeping inflation under control, even as the tariff situation adds more uncertainty. But they also have to consider the second part of their mandate, full employment. And that's where the cracks are starting to show. Interviewer. Speaking of that, the new data shows hiring has slowed and job openings are down. You mentioned earlier that this is creating anxiety in the labor market. What exactly are we seeing? Javier, the labor market is in a strange holding pattern. The jobs data released yesterday showed that labor conditions have worsened slightly since the fall. But for most of this year, the numbers have been stuck in a narrow range, not really improving or getting significantly worse. It's like a freeze. Both employers and workers are being very cautious. It's not like the post-pandemic job market, where hiring was booming. We're not seeing large-scale layoffs, which is a good sign. But employers aren't rushing to hire either. That's especially tough for experienced job switchers and younger or entry-level workers who are actively trying to find new opportunities. Interviewer. Right, and there aren't many big incentives being offered to attract new staff either.